as always, we really like to do some of the polling questions throughout this event. So I wanted to first and foremost take a bit of a temperature check in the room. So we're going to go ahead and launch our first polling question of this event, just to get a better sense of essentially the confidence level that we have across the participants today. So ultimately, really asking about your ability or your confidence level about hitting both top line and bottom line targets this year. So we're going to go again and give people about 30 seconds or so to just pick one of the options that you have on your screen now.
Let's see.
Awesome. So I think we can go ahead and start closing out the polls and share the results that we have. Let's see what we got. Okay, so we have our doubts. So do we. Sounds good. Yeah, absolutely. No, that I would say that this definitely is a bit more of a realistic crowd than the one that we hosted during we held a roundtable event about 2 weeks ago with a few of our Brazil GMs in São Paulo about 2 weeks ago. I would say it was a very confident crowd, the one that we had. So this is a much more realistic crowd that we're dealing with. So I would say that the events, the materials that we're going to share today will definitely highlight a few of the concerns that we have. But I also wanted to take this one step deeper and understand a little bit where some of the main challenges and a lot of the concerns that you have stem from. So we're going to go ahead and launch the second polling question and get a sense of what are some of the main challenges that we have that you think are going to be really the hardest to manage about profitability.
Curious to see this one.
Yeah, I'm going to be interested to see if it aligns with the previous event. All right, 10 more seconds or so. I think we can go ahead and close the results so we can share with everyone.
Let's see. Huh, interesting. It seems like the room is having more difficulty managing operational costs. I think that's pretty aligned with what we saw in São Paulo, no? What do you think?
Yeah, absolutely. I would also say there's quite a bit of us who are also struggling with fulfilling demand and also managing COGS, which is also some of the main concerns that a lot of our executives manage. I would say that COGS also, I imagine supply chain issues play into that. Operational costs, a bit of definitely not something that we heard, so very curious to see that, not as prominently at least, but definitely aligns with a lot of the concerns that we saw with some of our executives. But I would say that throughout our presentation, we're going to be talking on a lot of these different challenges, a lot of these different concerns that we highlighted here in this polling question. So hopefully we can give you a little bit of clarity of how we see each of these developing. So we can go ahead and close that poll and come back to the presentation here. So ultimately, here we go. So essentially, in order to really start contextualizing our conversation today, really, we wanted to offer some of the main takeaways that we have, essentially from the very get-go, to really help you understand what are some of the main conclusions that we really are hoping that you draw from this presentation. So first and foremost, we are going to talk pretty extensively about the impacts that Ukraine is going to have on Brazil's operating environment. So the main idea here being that overall, the Ukraine situation is really going to complicate a lot of the challenges Brazil was already set to experience over 2022, predominantly on the inflation side. So that's really bound to create a lot of additional difficulties over the course of the year. So the more that we see that those inflationary pressures building over the course of the year, more and more, both on the side of consumers as well as companies, we're going to see that discretionary spending capacity being squeezed and being limited. So particularly on the side of consumers for our B2C clients that we have on the line today, we're going to see that discretionary capacity really being shifted over for essential spending. So that's really going to have implications for our consumer spending outlook. Ultimately, that is not to say that Brazil shouldn't feel some benefits due to the latest disruptions that we've experienced over the course of the last, let's say, 2 months or so. So the main benefit that we really expect Brazil to feel is through these additional capital gains that we've seen coming into Brazil over the last 60 days. So ultimately, through this process of capital reshuffling that we've seen across emerging markets, Brazil has been really one of the key winners across this process. And that has really created a breathing room for the real that we didn't initially foresee. So that will ultimately lead to a much more appreciated currency than what we expected in 2022. I will caveat this by saying that this capital is highly speculative, and we will talk about the implications of that later in the presentation. So ultimately, this appreciation that we've been feeling in the currency is likely going to be very short-lived, which is why you'll already see the real back to that parameter of five reais to the dollar. And then finally, as well, as I mentioned, it's an election year. We're going to have to deal with the implications or the uncertainty that naturally brings to the overall macroeconomic situation. And ultimately, the one idea that I also wanted to stress here being that Brazil's long-term investment attractiveness will also depend on this next administration's ability to tackle fiscal consolidation. So regardless of who that next administration will be, fiscal consolidation and fiscal policy will really need to be at the forefront of policymaking in order to really make Brazil an attractive market for long-term investment. So let's talk a little bit about some of these international factors, right? So the impact of Ukraine. So we'll work from the international sphere into the domestic. So these were some of our assumptions for global growth prior to the war. So what we see is that there were definitely going to be a lot of elements that were going to help propel growth in 2022. So mostly associated with easing of the COVID-19 pandemic. But there were also going to be a lot of elements that were also going to really play negatively on our growth prospects, particularly with the continuation of supply chain difficulties and also the pressure that exerts on inflationary outlooks, essentially for everybody, right? For emerging markets and for advanced economies alike. But I would say that since we've seen the breakout of conflicts between Russia and Ukraine, a lot of these assumptions and a lot of these growth projections have definitely been shifted and modified. And unfortunately, these changes have definitely been for the worse. So what we see is that ultimately, a lot of these factors that were going to help propel growth in 2022 have definitely been diluted. So we definitely expect a much more timid and slower global growth environment for 2022, which for Brazil ultimately translate to additional growth challenges. And on the negative side, we really do expect additional challenges on the supply chain difficulty for additional challenges for supply chains. So we expected gradual easing prior to the war. Now we expect that these supply chain difficulties will continue over the course of the year. And with that, this will continue to add new challenges to the inflationary outlook. So those two will really particularly hit Brazil over the course of 2022.
Hi, my name is Krista Reganey, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.